It's May 16, 2014. Current time is 10:28 GMT. Jay Misley here with the daily Forex trading outlook. We are in a nervous Friday session with stocks now dipping into the red. That's seen the yen get some safe haven flows. The euro come down after a very tight overnight session. Now trading just below 137. So we'll focus on the euro dollar here, and in a day where we have U.S. data as a focus, we have new housing starts and University of Michigan sentiment. And interesting, markets have been ignoring good U.S. data, and it seems to be general nervousness that the global economy is not as strong as forecast. Now, as far as the euro dollar goes, I mentioned yesterday that we've had alternating days where we've had tight range on Monday. I think it was 25 pips, 85 pips on Tuesday, 35 pips on Wednesday. Then we had 85 pips yesterday, and today we started out we're in basically a 19 or 20 pip range until we just dipped. Even here, we're talking about 35 pips. So here's my view on the euro. We have market is turned bearish, and you can see that by the 5-day moving averages is 137.27. And if you look back, the close on 5 days ago is 137.54. So you got to figure most of the positions have been taken 25 or 30 pips either side of 120, or maybe 40 pips either side of 137.27. So there is not much. We're gonna have we should have some tight stops, but the market is gonna stay bearish. Until the ECB meeting in June, and the only way they're going to get out of those positions, either if the euro really dips and they take profits, or they get forced out. And what I mean by getting forced out is that the market squeezes up. It's tried it 3 days in a row, and each time it got repelled about or just above the 137.30 level. Today it got up to 137.26. So that whole area there is being a pretty formidable resistance, and that's the level. If you're going to see stops, you might see them above there, but also the 200-day moving average of 137.37. So as long as if you're bearish, you just don't want to see it above 137.30 to 50. And right now the market seems to be selling against 137.30. I mean, that's really where we stand. You got the yesterday we came down to 136.47, and that was 3 pips above a 50% retracement of 132.94 to 139.93. That's the move from start of November to last week's high. So there was a technical reason for a bounce. We got back up above 137, but we have not got to 137.30. So that really is the picture in a nutshell. For today, the focus is going to be on stocks and bonds, and that 250 level in the U.S. 10-year. If you look at the 4-hour chart, here's your 137.30 level. Pretty clear where the key level is, and then again, 137.75. So if you're bearish, you don't want to see above 137.75 or 137.30 to 35. Really 37 if you go with the 100-day moving average. And on the downside, you won't see key stops. Here's the 1 hour, and look how we had that little brief dip here, and look how we sat within that 136.90 to 30 level for extended period. It was just that brief 1, 2, 3, 8 hour or so dip below that 136.90 level, and we came right back into it. So 136.90 is a potential level here, and I would say see the phone off going in the background. I'm not going to pick it up. But if you look at today, that would be the range I would look for to see if we can establish outside of it. Otherwise, what we're going to wind up having is maybe a consolidating day. Now, I mentioned yesterday, and I got a request to leave this link up a little longer so people could click on it. 9 strategies to use in a low volatility market. And if you could look, if you have a chance, just click on it and read it, because it would have kept you out of trouble yesterday. when the market started to consolidate and overnight, and maybe give you some ideas how to trade it. In a day, even an overnight session like today, when the range, even now, the range is still 30, 35 pips so far. So I suggest reading this article. Click on it. I'll leave it up a little bit longer for you, and good luck and good trading.